Low-income borrowers are last to know about relief. Mortgage rates may be seeing yet another drop. Refi customers will be paying a hefty fee to combat market uncertainty, and the wife and I just accepted an offer on our house. Hello and welcome to the 90-Second Real Estate Rundown, a weekly show where we share the top headlines in the housing industry you need to know. Last week I told you that we had just put this house on the market, and this week we've accepted an offer. As I've been reporting for months, we're certainly in a seller's market, but now we got to find somewhere to go. Fingers crossed we avoid a bidding war. At least rates are low. With interest rates dropping at the beginning of the pandemic, mortgage rates have been slower to follow, but experts say we could see rates drop 2.65% or even lower. With every drop, there's a flood of refinance applications, so any drop in rates is likely to be very gradual to prevent overwhelming the market. Refinance volume is up 84% from last year. Black Knight estimates that there are 18 million refi candidates on the market right now. Refinance loans sold to Fannie Mae and Freddie Mac will now include a fee of 0.5% for cash out and no cash out refinances. It's called a market condition credit fee, and it's been put in place to combat loss forecasted because of the economic uncertainty caused by the pandemic. For a median priced home around $293,000, the fee would amount to just over $1,400. While it's the lender who will be assessed this fee, it's expected the cost will be passed on to the consumer. Fannie Mae released a report that finds low-income borrowers are less likely to know about forbearance and similar relief programs. 60% of borrowers with income below $50,000 said that they weren't aware of relief options. Watchdog groups blame lenders for sharing confusing and incomplete information at the beginning of the pandemic. FHA, VA, and USDA mortgages backed by Fannie and Freddie are all forbearance eligible. That accounts for more than half of all existing mortgages. With news that cyber attacks are an all-time high as millions of people work from home during the pandemic, experts identify two common security flaws among corporations. The first is weak passwords. In a penetration test, 71% of companies were guilty of this obvious security flaw. The second security flaw, using older versions of software that no longer receive security updates, like Windows Explorer. The test was conducted by ethical hackers who were able to gain access to internal company systems in an average of 4 days, but some as quickly as just 30 minutes. That's all we're sharing for this week. Please like and comment to let us know what you think. I've got to get back to house hunting. Wish us luck.